All right. We are live. YouTube and VTF. So let's do it. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by me are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure here. Added a little of this diamond offshore. Was very on the fence on keeping it. Decided to keep some. I'm not massive in it, but it was an interesting one today. So let's talk about it. Market did exactly what we were expecting it to do today. Where are my charts? Here they are. Okay, at the end of the day here, the SPYs are down 0.5%. The Qs are down 0.9%. The IWM got massacred, down 1.9%. That IWM is definitely a concern. But let's start with the SPYs here. Do we really close with that big of a tail? Let's see, we're trading 30 cents higher here after hours. Oh yeah, look at that rip in the last 5 minutes. Wow. I wasn't expecting to see a daily candle that looked like this, to be honest. When the market closed, I ran down as quick as I could to grab a snack. But yeah, it looks like when those MOCs came in, we really got bought up here in the last 5 minutes off of this low. So leaving us with an interesting candle here that's still kind of in space. We're still really extended to the upside. So Bill saying it was the 1.1 billion to sell that flipped to 500 million to buy. That'll do it on the MOCs. So yeah, look, we expected a technical pullback today. I think the reason for that is obvious at this point. The market was pretty much going parabolic by yesterday's close. We were getting really extended again from the 80 EMA and further from the 21 EMA. The space between those two moving averages is widening out here. This amount of days up in a row into this resistance zone, which is a major resistance zone. It just gives you, you know, pretty much every technical reason here on why we should pull back. Yeah, pretty much every technical reason. Extended market into resistance, we should pull back. So that's why I started shorting that TQQQ and that U Pro yesterday to hedge myself out. That was definitely beneficial to me today in this pullback, though I was definitely a little frustrated to see. And then I don't know why I'm frustrated. This is what always happens, that some of my stocks, which are pretty high beta, were down by a good bit more than the market. So I did have a negative day today, despite having some okay day trades and having those hedges on and having a couple of these oil stocks that were green for me as well. But you know, Bed Bath & Beyond, which is something I still have a position in, even though I sold a lot on the way up, being down 16%, definitely had a little bit of a damper on my P&L today. But it is what it is. You know, we've been trading really well recently. We expected the pullback. As we discussed in yesterday's afternoon meeting, they made it difficult. They made it difficult to be able to have stock short for this pullback because they closed us on highs yesterday. So that makes it really difficult to have short trades on. I feel like almost the only way you could have had shorts on was if you're just short with no stop loss, which I don't recommend at all, or you know, what I had been explaining that I was doing was because of this degree of upside extension into the resistance zone, I was putting on some shorts to act as a hedge. I don't have a stop loss on those shorts, but I have a game plan to liquidate them and size them down based on how the market chooses to correct this upside extension through time or price. And in the event that an extended market becomes even more extended, which we do know can happen, well, that won't be the end of the world. It just means that I you know, won't make as much on my longs as I would otherwise, which just understanding a probability of a time or price correction with this degree of extension, that probability is very high. that in the smaller probability event that the market were to continue to rip higher today, which it didn't, I would be fine with that. I just wouldn't make as much money. So that's kind of the thought process there. And I did downsize a little bit on the U Pro and TQQQ shorts that I have into the down part of this market today. The interesting thing, and maybe the most concerning thing in some ways, is the weakness in the IWM. And the IWM is actually not the one that I wanted to go to for a short. Because the IWM, given that close above 207, this was the one index that was not really extended at yesterday's open, whereas the SPYs and the Qs still were, which also means that you've had some recent relative weakness in the IWM. It kind of goes back to the question somebody asked me in yesterday's afternoon meeting on, are you better off, if you're expecting the market to pull back, shorting a stock like an Apple or a Tesla that has been relatively strong but is even more extended, or shorting a stock that has been relatively weak but is less extended? And we talked about how it's a very hard answer to give, because I view one layer of probability on the side of the short as the degree of extension, and one layer of probability on the side of the short as relative weakness, or against it as relative strength. So it's like each one of those ideas has kind of one thing for it and one thing against it. So, hard to just kind of say that without seeing the price action in real time. So the IWM honestly was not the one that I wanted to short because I thought it was the least extended and really cleared above that 207 yesterday. And that's the one that gave the biggest pullback. IWM, which in a lot of ways, this Russell, I think, represents the broader market more than anything else. It is very notable that it was the Russell that led the market lower starting in mid-November, and the SPYs and the Qs, especially the SPYs, took a while to be able to follow that. SPYs are still making new all-time highs at the very end of December, early January, whereas the IWM was basically already in a correction by that point. So it is, I think, notable, and I know Pat's been posting a lot of breadth information into the VTF recently. I think it is notable, this weakness in the IWM, and it's a little bit concerning. But the flip side of that, and again, you don't like the fact that it negated a higher volume breakout candle that it had yesterday fully. But the flip side of that is that it still is above 207, and it only ticked back to that 80 EMA today. So we'll continue to watch it, but the IWM notable weakness could be somewhat concerning. SPYs and Qs still held up really well. Apple still held up incredibly well. I guess this is technically a negative day on Apple, but Apple's getting hit with good news today, which wasn't making it move up so much as it was making it not break down, which I know that some of those folks have been, some of you folks here in the VTF were shorting Apple today, which was one of my ideas, or one of our ideas. We discussed in the morning meeting. The only reason I wasn't involved in this Apple short with you guys today, back through yesterday's high, and that was the trade, and luckily that never shook anybody out, even if it didn't give fantastic follow through. The short was really kind of right here, back through 179 versus this high. The only reason I didn't short Apple with you guys is because I still got some long, and I'm not gonna let the possibility of this price correction come in, ruin stock that I have to the long side still from this low. It just doesn't make sense for my game plan for the way that I trade. But at one point today, I was considering shorting Tesla. I didn't do it because it was getting hit with bull flow and it was acting relatively strong, and it still is relatively strong. It held up very well today, but the market did give some degree of a pullback today. So we'll see. We're still extended. We should correct further, by the way. I know that the last time we had a little correction in this up move was this March 23rd, and it lasted literally one day, and then we got upside continuation. But we're even more extended here as of this close than we were on the close of March 23rd. We really should time our price correct even further. So I followed my game plan to size down on my U Pro and TQQQ hedges as we became less extended throughout the day today. And again, I was glad I had those on because they helped save me on some P&L. But as we time our price correct further, I'll work my way out of them. And the other flip side is that I am significantly less long, because I've been, following my game plan to be selling on the way up and selling into extension. So just kind of continuing to follow the game plan on those trades, and we got exactly what we were looking for, but it was tricky. And the reason why it was tricky is because we had a common gap down. So A market that is extended to the upside that should pull down is one factor. A market that's having a common gap down, which should fill that gap, which is higher price action, is the other factor. So that's what I'm saying. It just made it really difficult to be able to get those shorts on. Just made it really difficult. If we could have gotten that gap up, it just would have been easy money. But when you gap down like that, you got this thing against you, which is this gap that could get filled here while you're still extended. So it makes the execution on the short difficult. And you can just see that with the sloppy price action in the Qs. SPYs would be similar as well. And then it is notable that the first time we saw any bearish option flow, I feel like in like a week or two almost, was pretty much right before we got this initial breakdown to new lows. And then even that didn't give tremendous follow through. We had this grindy bounce and this grindy move lower back to those lows until we finally actually broke to new lows on the day, and it accelerated a little bit. And then even still at the close, the imbalance switched and we caught a bid and didn't close super weak. So, we'll see. I by no means am ready to come in and say we got to start buying stock at this point. We're still too extended. And as you guys saw with my game plan, based on my research this morning, I had nothing. I had nothing in the game plan this morning. Like I was like, maybe some of these oil companies. Diego had brought up this 9 chart for the Breaker 350. This is one that I was in. This turned out to be a pretty good trade. I was hoping it would open below 350 so we could take the momentum through 350. It opened right above it. The low here of the open is $3.54. That was actually my price. I took the offer on that, like right as the market opened, or maybe like 30 seconds before the market opened, in between the end of the morning meeting and the start of the trading session. I just took the offer on some at 54. And got this great little explosion higher all the way up to $4.06, and then that still failed. I couldn't believe this thing broke those lows. I didn't reload any stock on this thing on the way down. I just took the one trade, sold a whole bunch on the way up, still held 30% of my position, I think, something like that, maybe a little bit less, and gave that all the way back and kind of got stopped out of it. Then that Newegg, these were the types of trades I was looking for today, things that could potentially trade independently of the market. This Newegg, still mad at this company for how my computer got stolen that I had purchased in New York City, even though I ended up not paying for that. But we saw the big momentum come in 2 days ago, kind of some meme stuff going on here. Inside day yesterday, so looking for upside continuation on that. Cody called out that this thing was coming up to yesterday's high. The volume was looking really big, and this was even before it even increased faster. So I actually cheated on my initial entry on this, I think, not by much. I think I got like 32 cents on my initial entry that I was giving to the low here. And then I took a very heavy scalp ad, which I don't do this very much anymore, to be honest with you. It put in this quick tail down to 28 cents, and then I think I took the offer to buy like a boatload more in the mid-30s versus that low, which I don't really ever do that. It's not really kind of my type of trade anymore, because there's just a very high probability of getting pushed out and it's still working, and I just don't like that. But if it could go and there was going to be, massive momentum to the upside, if it was going to give a range today that was going to double this candle and, go up $3, I wanted to have size to get paid on it. So I just kind of went for it on really small, tighter risk here. It worked out really well initially, got this move to above $8. I traded this one really actively, kind of back and forth. I tightened up my stop to this low, and then I got stopped out of everything. So my original core position and my ad, I tightened up all that stop to this low, got stopped out of it here with like no slippage, which I thought was notable, but I did not want to come back in and fight it. So it turned out to actually be a pretty good winner. I made a little bit, even though I was late on this NEO. I know some people were asking about this thing. Felipe was all over NEO. We've been talking about this XPEV for $30 for a while. XPEV reported earnings a couple of days ago. So we've been looking for the momentum trade on XPEV through $30. Whoops. That one worked well, but it was just so extended by the time it got through 30. I know Felipe called out a cheat at like 29.20 or so because of the volume. That was the key characteristic here, by the way, for both XPEV and NEO, was the consistency of the volume, the high volume, and its consistency that was coming in with. So I know Felipe communicated early about this XPEV, and I think he was actually selling into 30, which I love that. You know, when you catch that early indication that you can cheat on the breakout, so that by the time it's getting up to the resistance area, you can actually book profit there. It's hard to do. It's hard to do. Most of the time we want to wait for the level to actually clear, but your other layers of probability are coming in with this volume, and other stocks that are similar to it like NEO are going, you can kind of go after it. I never got involved in that one. I was too wimpy to cheat on the break of that 30, but I did chase a little bit of NEO. And it was hard to buy much. I couldn't really get heavy on it because I felt late. So I was buying like 22.40 or so, using the low of that bar because of the volume that came in as my stop. Biased towards the company, which probably helped me with the execution. $22 is important. I wasn't paying attention to it when it cleared. I had noted back here when they missed on their earnings forecast, which was concerning, that if they could buy this thing back up, it would be a signal that the market's shrugging that off, and it could be, you know, like a really good buy for continuation. So I didn't love that I was buying on the third day, but I did understand that information coming into it because we've reviewed the stock enough as a team. So when I saw the volume coming in a major way, $22 was the level. I wasn't paying attention to it. I didn't have an alert out. I missed it, so I missed that opening initial drive trade. I wanted to get more stock. Ended up buying like really more of a feeler. I didn't have too much, but the move on it was so big that it was impossible not to get paid. I just hit a point, honestly, though, where this shooting star came in because of my size that I just liquidated the entire position. The volume was so big on the shooting star. I know all it means is a technical pullback, pretty much exactly what it did. This is actually a very shallow technical pullback. And then it gave upside continuation, trend continuation, which is exactly what it should do. But I just decided to kind of liquidate my position and reassess here. So I was able to make a few bucks on that. But then I decided to do something stupid and throw some money away in Roblox. And this is still a consistent issue that I have with my own trading, where I kind of get just a little bit too happy with myself at a certain point. Like, I mean, I am about to close out an incredible March from a P&L perspective. Did really, really, really well this month. You know, looking like a solid six-figure month for me is where I think it's going to end up. So pretty happy with that. But this has become one of my bigger weaknesses as a trader. Yeah, Bill calls it being profit drunk. When I start doing too well is really when I start getting a little loose with my decision-making process, and I know this of myself now, where I really try to get ahead of it and make sure it doesn't happen. But I caught myself a little bit with this Roblox kind of doing it. You know, we saw the bullish option flow come in. We saw the relative strength in the stock that was kind of coming in. It's got the solid level here that we've been kind of looking at. The volume really picked up. I'm late on the trade, but I see the inside 5 breaks up, and I'm late. I take the offer at probably 51.80 or something like that. What was my pricing? Just under that. Looks like 51.77 or so. So I'm even a little bit late kind of on the execution of the break of the inside 5. And on just that initial trade, I got my risk covered. But then here's where I started making the mistakes. And I literally sold just about the high here on half my position. And then this is where the mistakes came in. And I've been way too disciplined for this entire calendar year for sure. I've been trading really well this calendar year. I have not been making undisciplined mistakes. It's one thing if you have a trade and the trade just fails. That's not what I'm talking about. I'm talking about undisciplined mistakes where you don't follow a game plan or you do the things that you know are wrong that lead to losses. And I tend to start doing this sometimes when I'm doing well, but I know that, so I haven't been. And today I just totally did in this stupid stock. I had my position. I was able to cover my risk. I honestly don't even remember what I was using as a stop loss. I think I was trying to use this low as a stop loss. And then this is a mistake. Let me go over this mistake so other people can learn from it and hopefully they don't repeat it. And I've made this mistake before. I look at my position size. I look at my P&L. And I say to myself, I'm not heavy enough in this position. I want to make a lot more in this position when it works. The flow is coming in and the volume is there. Yeah, I'm ignoring that it's a crappy time of the day at this point to be initiating new positions and that. And another thing is that I'm super concerned about the market. I think the market's going to pull in. So why am I like thinking that I should be taking this on size? So, I kind of take my initial trade. I think I got my risk covered on it. And then I'm like, you know what? I'm not big enough. And as this thing pulls back, I'm like, all right, let me take my stock back. And then I'm like, all right, let me take even more because I should have had more to begin with. And then, and then I just kind of took even more and more. And then I'm like, let me take even more because coming back to this low and the ADMA caught up to it. And I think that this should be able to hold a pivot point here, but I'll give it some breathing room in case it's loose. I'll give it some breathing room, maybe down to kind of this low here. So then I just got heavier and heavier and heavier into the position. I stopped out of some of the ad on the break of this low. And then I was like, you know what, you're keeping this too loose. The volume's there, the option flow is there, it's in the equilibrium area. So I immediately rebought that stock that I got stopped out of. That's like mistake number 2, by the way. Then finally this thing is cratering back down. I get stopped out, and then I come in with mistake number 3. And I get stopped out of the full position on this break with a little bit of slippage. And I say to myself, you know what, it looks like the market is pivoting. It looks like the stock is pivoting. So I re-uptick my stock like 13 cents higher from where I got stopped out from, and then put my stop in at that new low to just then get stopped out even again to be able to compound my loss. So it was really like just a multitude of like 3 or so big mistakes there. And these are all things that I know not to do, that I preach to you not to do. Mistake number 1, buy the ticket, take the ride. I chose the amount of risk I wanted to put on the initial trade. If I chose not to put on enough, that maybe is a mistake, but it's not a mistake I can correct during this trade. It's a mistake that I can correct in future trades. Recognizing, hey, when I go back and I review my trade here, I can look at this and I go, you know what? You really should have taken more stock here and more initial risk for this reason, and this reason. That's the right way to do it. Not look at, oh my God, this thing is ripping. My size isn't big enough. I want to make a lot more money. I want to close out my month even bigger. So let me just triple up. I did more than that. I think I like quadrupled my position on the way down on this initial thing. So that is mistake number 1. I had the game plan. I bought the ticket. I didn't take the ride. Mistake number 2 is that I was like being stupid with my stop loss. Have a game plan with risk in, know what your stop loss is, and know exactly how much you're risking on the trade before you enter the trade. That's exactly what I always preach, and that's exactly what I didn't do. I was like, all right, I'm just going to take a bunch more stock here. I'm going to use now on that, some of it for here, some of it I'll give all the way down to here. Oh no, I shouldn't have gotten stopped out on this. I should have given it down to here. Let me rebuy that stock and give it all down to here. I don't know how much I'm risking. This is stupid. So that's just, it's all these things that I always tell everyone on the team, don't do this. Don't do these things. This is not how you be a consistently profitable trader. And then finally, I end the whole situation with like a revenge trade where I'm like imagining in my own brain as the market's breaking down that a pivot should happen in the market, and I just got pushed out of this, and I can't bear to see it stop me out and me lose this money on a trade that I should have made money in, or at least be break even in, and then go without me. So let me just retake the offer on the entire thing and just lose an extra 15 cents or whatever on the trade on top to compound the loss on it. So I did that, and I ended up losing in this pretty much exactly what I made on Newegg, Neo, and 9 combined. So all the great execution from day trading that I did on that stuff, even though I ended up getting stopped out of Newegg and 9, they paid me pretty decently. I traded it pretty well, just in time to take all that money and just throw it entirely in the garbage by just doing stupid things in this Roblox. And I'm sitting here and I can see my negative P&L on it, and the thing should have been a break-even trade. And that's exactly what it comes down to. So don't do any of those things in your trading They are all it's just compounding mistakes. It's not what leads to consistent profitability. I know that, but all the same, I still decided to come in and be silly. But if I can give myself at least a smidgen of credit, what did I do once I did that stupid final revenge trade? I basically said to you guys on the VTF, like, sorry, I gotta go. Like, I needed to take a step back. Like, I knew well enough here to know that I just made these stupid mistakes. I knew well enough to know that I would be really upset if this stock pivoted here right after I got out and went up. So I honestly said to myself, and it was coming into 11 o'clock, which is usually when I get a little bit busy midday anyway. But I said to myself, I'm just going to step away from the computer. And then the 11 o'clock call I was supposed to have actually ended up not happening. So I honestly just took 20 minutes to go outside and shovel snow. Just went in the back and just shoveled snow as hard and fast as I could to kind of get some frustrations out over doing stupid things. And then it's the same, and then you just got to calm yourself back down to the same mindset of, I'm just going to go back in front of the screens, and I'm just going to do the right things consistently going forward, and it just is what it is. Every time you try to make up for your mistakes, you make more mistakes. So never try to make up for your mistakes. Never try to look at the P&L that you're down from your mistakes and say, oh, like, I'm going to try to make it up. The right mentality, and I've been telling myself this for years, and if you guys remember when I was doing the bike ride thing to the office like last summer, and I was filming some of those TikTok videos, if you ever watched it, what I would say to myself every day, and I still say this to myself all the time, is look, all you got to do is the right things consistently. I've been trading long enough. I know what the right things are. All I got to do is those right things consistently, and I will make money in the long run, even if I don't make money every day. But doing this BS is not the way to do it. And thinking that I can, make it back or make the mistake back or something like that is just totally not going to work out. So that is all that. And then, I guess I don't really have anything else to talk about. I think we were really on point once again with what the market did. So, shout out to the team on just how consistent we've been on, just being right on our market expectations recently, which is awesome. I did initiate a new position in this DO, which I was able to close decently in the money on. This wasn't even really on my radar until it was down to 7, luckily. This thing was disgusting here in the beginning of the day. You can't even see on my chart like the highs. Just move this moving average. I did. But yeah, when this thing was starting to base a little bit off 7, I kind of built into it and booked some profit on the way up here. So this one paid me okay here at the end of the day, and I decided to keep a little bit just to have a little more oil exposure in a name that's new, so it could give me extra volatility. I like volatility, though I'm looking forward to hearing what Stefan has to say, if he can take a deeper dive into the stock at some point, because I know he hasn't yet. So that's it. That's all I got. That's all I got. Happy to take a look at what you guys got and answer any questions. So I'm going to scroll up into the virtual trading floor and see what you guys got. This path is really interesting. Getting smoked on this earnings report. I'm potentially interested in actually starting to come in and buy this thing. I want to take a closer look at this report and look at the price action tomorrow. I've been eyeballing. I know Kathy's in this thing. She's getting wrecked. I've been eyeballing this thing since it was in the 70s, saying I want to be long this thing, but I haven't been able to because there's been no way to be able to get a position in it because it's been so gross. I tried it a couple of times and I never really made money, never really lost money in it. But now that this thing's in the low 20s off this earnings report, I want to take a hard look at this thing. I'm interested. Yeah, I'm not sure if the SPY looks nice for tomorrow. I think it needs more time. I do think that the shape of this candle with how we close is interesting, that we were able to get a tail here. I also think that it's interesting that, once again, we didn't break down as hard as we should have. And I always think it's notable that when the market doesn't do what it should, you got to ask yourself why and what it means. We were looking for the market to pull back today. It did. But like especially in the SPYs, this was just like very grindy to the downside, like just really correcting through time almost as much as through price. Not like a massive price correction back down off of this move, which is kind of what I thought was going to happen today. Really, same thing with the Qs. Maybe Qs had a little bit more pressure on it. I still think we need to be patient at this point. We're still too extended after too big of a move. I want to let the market really price and time correct this one out a little bit more. Unlike this one here where I was ready to immediately get out of my hedges and start buying more once we saw like this day I remember had massive bull flow. I'm not necessarily ready to make that quick of a jump, but I still got to assess more of that tomorrow. But I do think that with this degree of extension, I'm honestly still really impressed the way the S&P and the NASDAQ was able to hold up, which part of that must have to do with, you know, Apple and Tesla continuing to hold up so incredibly well. But then you look at the IWM, which maybe gives you a better understanding of kind of your average stock out there, and the IWM was absolute trash today. So we'll see. I think I need more information. From Jerry, wanted to share some challenges with the team. I am coming up with good ideas, but struggle to aggressively put on the trade when it triggers, especially after taking a failed trade first. Gotcha. LAC today got the alert, but looked extended on the 5-minute chart at that time, for example. Any suggestions? Yeah, my LAC alert went off too. I don't know if yours went off where mine went off. I think mine went off around 37.75 or something like that. I think is where my. I wonder if I can find that in my messages here. Does it tell me? What time was this? 10 or so. LAC 35.75. So even later than that was where my alert was all the way up here. I couldn't justify chasing this price when my alert went off. That's when I communicated it to the team. I don't know if your alert was earlier than that or not. But even anywhere above 35, very hard to be able to buy this into this move. And that's for the right reason, though. You know, if and again, I don't know where your alert was. I don't know what your price was that you were looking at. But if your alert was anywhere near mine was, or 35 or worse, I agree with you. I don't want to be buying this thing at 10, 15, at 35 and change, or even 35 when I got to give this thing down to probably at least this 33.76 as a stop loss and a $35 stock. I'm not coming in and risking $1.25 in that. I think that's prudent. But that's that example. Yeah, for sure. So Jerry, honestly, what you're saying here, I think was before my Roblox rant, is when you type the question in. It really comes back down to telling yourself what I tell myself, which is, and this applies to many different people in many different ways, because we all have our own weaknesses and things that we're working on. You just need to do the right things consistently over time. You know what those right things are, and you know what the right things are not. Because we talk about it all the time. So, you know, just do the right things consistently over time, and that's how you're going to get paid. Try not to get in your own way, and I know this is very hard, but try not to get in your own way just because your last trade failed or you're down P&L on the day. And different people definitely have different personalities with this. I know traders that when they're down, they kind of fall apart. And they start making bad decisions when they're down. I personally, kind of like I was just describing, I tend to be the opposite. If I'm down, and because of this, I can honestly give myself like a looser lockout and stuff like that. When I'm down, when I'm not doing well, when I've taken a hit, I've had a bunch of red days in a row, whatever it is, that's actually when I become like hyper disciplined. I become like super, super focused on really doing the right things with my trading. And that's actually usually when I trade best. I'm the opposite, where, like I was saying, when I start doing too well is when I start making mistakes. But plenty of people are the opposite of me, where they're doing well, they can build on that, but they have a bad trade, or they're negative on the day, or whatever it is, and they have the opposite psychological effect where I've seen traders who, when they're doing poorly, they're almost defeated on that next trade before they even press the button, and that is no mental state to trade in, because then you almost become like a self-fulfilling prophecy. Like, it's like, if you don't believe that your trade can work, your trade's not going to work. And even if it does work, you're not going to trade it right because you believe that it wasn't going to work, but you just kind of took it anyway because you don't even know, right? Like that just that doesn't work. So know your personality is a big part of it. Try to focus on doing the right things consistently over time, like I always tell myself. Be aggressive based on those layers of probability, like you're saying here in this chat. And don't be afraid to, if you're not in the right spot mentally, to go outside and shovel the snow, like I did. Don't be afraid to do that. That's fine. That's totally fine. Sometimes we have to take a half step back. You take a half step back so you can take 2 steps forward. You go out and you get a breather. You go walk around, you go do something. Generally, I'm not a believer in, I had a bad day, so I'm shutting off my computer entirely and I'm going to go do other stuff, because I don't think that's how progress is made. I think progress is made when you have a bad day and you take the time, even if it's painful, to sit down and really review what went wrong so that you can get better. I think progress is when you're not doing well, saying, you know what, I might be done trading for the rest of the day, but I want to still learn, so I'm going to read, I'm going to do research, I'm going to follow along with the team, I'm going to communicate with the team into the ETF. That is what I suggest. Not just shutting your computer off and walking away when you've had a bad day, but maybe not trading, but figuring out how you can improve. But at the same time, as I say that, there's nothing wrong with taking a step back when you need to. And again, even if it's like what I just did, which was go outside and aggressively shovel some wet snow for no... I was literally taking this huge pile of snow that's next to the house on the grass and just taking the shovel and just taking the snow and just spreading it all over the grass so that it would melt faster. Like there's no reason to do that at all. I just wanted to blow off some steam. So I hope that helps, Jerry. From Jimib, could you define bull flow? So when I reference bull flow, I'm talking about bullish option flow. The bullish option flow that Pat posts into the VTF. He does a fantastic job getting that information into the team here. If you pay attention to it closely, it's incredible how that can be an indicator for stock market movements. Part of it's a self-fulfilling prophecy. Part of it is I think Pat likes to say it's like the one thing that really shows us what the smart money is doing in real time. Otherwise, you only see it after the fact. And you never know exactly, like, maybe it's a hedge or if it's a new position or whatever. You might not know all that information perfectly, but it's enough where I can't tell you how many times we see the bull flow come in and then the move happens, or we see the bull flow come in and then the next day the news comes out. It happens all the time. Did you guys see that 60-year-old woman who just got a year in prison for insider trading? She's like a retail trader, and like her husband said something that he shouldn't have or something, and she, without his knowing, went and acted on it and made like $300,000, and now she is going to be spending a year in jail. Kind of crazy when we see bullish option flow that coincidentally, I'm sure it's just a coincidence, leads news as often as we see it. But it's definitely something that we pay attention to. It's one of those additional layers of probability, and that's why I didn't short Tesla today. I was looking at shorting Tesla at one point today, right here. Why didn't I? Because all of a sudden Pat posted some bull flow, and I said to myself, you know what? That's a layer of probability against this trade, and I still think the market should pull back, and Tesla's still super extended, and there is a trade here where I could try to be short off this gap fill or whatever, I'm not going to aggressively take this trade. As a matter of fact, I'm not going to take this trade at all because I'm watching Pat post bullish option flow into Tesla, and I don't want to fight that because of how often I've seen what it does. It's a layer probability against a trade. So Pat saved me some money today by posting that information. So thank you, Patrick. Because then 10 minutes later, high volume breakout coming in here to the upside that would have totally stopped me out with slippage and all the rest of the good stuff. So that's that. Just reading your note here, Stefan, on Dio. SEC chief casts doubt on imminent deal to avoid China delisting. That's a weird one there. Diego. Diego asking, you do maybe 3 of these types of mistakes a month? Question mark. I did 10 or so 3 weeks ago. Now averaging 3 a week. Focus, focus, focus. Yeah. Do I make 3 of those mistakes a month? Probably was making like 2 a month, maybe on average last year. And I kind of made like a resolution to myself that I wasn't going to do any mistakes anymore coming into 2022. So that Roblox, honestly, I think was the second time I've made a mistake, anything that I would consider to be a real mistake in the year 2022 so far. I did one other stock. I can't even remember the name of the symbol. That cost me however many, some thousands of dollars, a few $1,000, something like that. And I was so mad at myself. I was so mad at myself because I'm like, I'm not doing these mistakes anymore. I'm not doing this. And then I did it again today. Wasn't a huge loss in Roblox today, but totally unnecessary. Can't turn winners into losers, guys. You can't turn winning trades into losing trades. You can't turn good days into bad days. It's a core principle of trading success. Like I say all the time, trading success comes down to money management. Your ability to manage money and manage risk is significantly more important than your ability to trade. Show me the mediocre trader who never turns a winning trade into a losing trade, who never turns a good day into a red day, versus show me the really skilled technician who will turn winning trades into losers and turn good days into red days. That mediocre trader will always come out on top. It's the most important thing. And again, I know we spend so much time on technical analysis and execution, and all that stuff is important, but the number one way to be a consistently profitable trader is through consistent money management and risk management. So that's it. Gotta stay out of the metaverse. From John K. Roblox, would you consider an inside 5 and down as an entry as you would an inside 5 and up as an entry? Yeah, I would, John, but it's on the same conditions. So, you know, I assume you were in yesterday's afternoon meeting because we spent a good amount of time talking about inside candle setups. If you weren't, check out the video on YouTube for it. Inside candles, we use them as execution setups specifically from when we like other things. Trend and momentum. So if the trend and momentum is higher and that inside setup comes in, I want to be taking it long. If the trend and momentum is down and that inside setup comes in, then absolutely, you can take it short. That's when Tom gets up and takes his dog for the walk. I love it. Yeah, a little similar to the MACD situation there with Apple. Thanks, Steve. Is Tilray still in play? Yeah, this Tilray's tough for me because I know that Will 27, if he's still listening, has been really focused on it, so he might have some feedback for you on it. I struggle to believe in this company, which makes me struggle to take these trades. But yeah, I mean, great initial candle here. Rest. Really, today was even more rest, and yesterday was more rest. I don't like this candle today. It hasn't broken down. It's still building out this wedge. I think we said after yesterday's afternoon meeting that we'd like to see this build out a wedge a little bit more for a day or two, and that could give a better setup. I think I remember saying that I might have said it in the morning meeting today. I said that I really want the ADMA to be at least 750 before I start thinking about continuation on this thing. So the ADMA is not quite there yet. This thing tried to go and failed, almost kind of similar to, why do I keep doing that? Almost kind of similar to like that Newegg today, where it broke out but then failed. Which doesn't mean, again, I was able to make good money in this Newegg today. You can still take this trade, and if you manage it well enough, make money even if it fails. But yeah, Tilray here honestly looking very similar with the break higher, the meme things coming in, the volume here coming in, and then the pattern almost looks the exact same, honestly, as the Newegg that I was in before it eventually failed. So if you were early on this, you definitely could have made money on this, break of this 870, or even if you were a little earlier than that, because you saw the volume coming in and traded this pretty much the exact same way that I was trading Newegg before it failed. And again, I know I said I don't believe in Tilray. I really don't believe in Newegg either, but maybe a little bit more than Tilray. So yeah, today's candle is no good, but it's not totally broken yet, but it's definitely a warning signal. So let's let this thing set up. Let's let that ADMA catch up like I was talking about, I think, this morning. Let's let this pattern build out a little bit and then see if it can actually break higher. Good stuff, Robert. Yep, keep making the progress. You too, Nick. From Terry Jones, in regards to AMC, GameStop, and other stocks having frothy price action in the last couple of days, should we be concerned with the overall market? Also, can you give your thoughts on a couple of names, TOST and Jabi? Yeah, so I kind of mentioned that, I think, in yesterday's afternoon meeting a little bit, that this is notable on this AMC stuff. It doesn't necessarily mean that it's a market high, but it is kind of notable that these squeezes are happening again, and I'd love to know more about the dynamics behind this and how it is related to, from a fund kind of perspective, or if it is related to this market moving the way that it did, which we know has caused a lot of short squeezing and hedging to roll off in the last 2 weeks. And I'm curious to know if this could be the final stand of that, but I really don't know. And what we have seen periods in the past where the momentum on these was consistent for fairly long periods of time. So maybe this AMC is just pulling back here, and next thing you know, it's going to make a higher low and break the 34 high, something like that. I'm still annoyed at myself. I didn't get that short yesterday, 34. But whatever. So I'm not sure, Terry. It's definitely something I've thought about, but I don't. It's something that's in the back of my head. I'm paying attention to it, but I really don't know yet. So we'll obviously continue to monitor the situation. TOST. Oh, this looks a lot better. Starting to break up on some levels here for the first time. I think this thing looks good. You want to see this thing ideally continue to stay above 21, and definitely continue to stay above yesterday's low, which is 1977. A lot of these growth stocks to me are looking maybe not like they want to give 100% return here, but looking like maybe they don't want to be going down in the way that they were in the past, which could lead to some okay upside trades. And this would just be another one. I know we were looking at like all of them yesterday to see if they could get some rotation, which they did. And then today I didn't like anything, including growth stocks. So yeah, so it's looking better. JOBY, Jabi, haven't looked at this in a while. Oh, this looks good too. Also broke out yesterday, along with all the other kind of growth stocks. So kind of a similar situation here. You want to see this continue to hold the $6 breakout, ideally, or worst case scenario, you really don't want to see it lose kind of the ignition daily candle here, which has a 580 low. When I mentioned taking larger size, do I layer in or do I place one large order? It depends on the trade. It depends on the trade. In Roblox today, I was doing it. Piecemeal. You can see exactly what I was talking about. My initial buy, my risk covering, me going, oh, I don't have enough stock. Let me take my stock back. Me going, I should have been heavier to begin with. Me getting stopped at a sum. Maybe it was actually over this low. I thought it was over this low. Me getting stopped at a sum. Me immediately rebuying that stock back. Me doubling down on the position in front of this stop loss. Me getting stopped out of everything. Me rebuying it. Me losing extra money. So this one I was not doing it all in one shot. It really kind of depends on the trade. It depends on the liquidity of the stock a little bit too. I don't like to show in thinner stocks all my size sometimes if I'm buying a lot because it makes it more difficult to get filled. But yeah, it really kind of depends on the trade. From Justin, recently I feel like I've been getting better and taking better trades, but I have not really been seeing a change in my P&L. I have been generally doing the same P&L wise, even though I feel like I have been taking better trades recently. What are your thoughts? I'm not sure, Justin. I'm a big believer that process is the most important thing. Like if you have a strong process, the P&L will flow naturally. So I always want to say in theory your P&L doesn't matter, that doing the right thing and getting better is what matters, but it's not entirely true because we are here to make money, so P&L does matter, but it does really come down to process. So I would say if your process is improving, that's the most important thing, and that your P&L should follow through. Maybe it's just that the market's gotten trickier here a little bit, so you're doing even better just for similar results, which still is improvement. Otherwise, I'm not really totally sure, to be honest with you. That would be my guess, is that things just got a little bit trickier here, and you're doing better with the same result, whereas if you were still doing as you were, you wouldn't even be keeping the same P&L as you had, if that makes sense. Can I repeat what? Felipe, please, Felipe. BA on the China news. I got a little of the Boeing bounce. Yeah, I was not really focused on markets when Pat got the news in the VTF. I know he got the news in super early like he always does. Josh was like, Pat had the news in at 193, and then it went to 197.50. So I don't know where you got in. Broadly, if you think that news is significant, you could just go long versus that low if the price makes sense and the risk reward makes sense. So that's what I would usually do in that situation. It's, we get the news in really quick, you look at it, and the question is, does the risk reward versus the low news matter to you? And that's what I'll use as the stop loss is the news low. If this low breaks, the market's telling you that the news wasn't important, you got to get out of the way. And then if it works its way up, you never know, how well it's going to do. So you do try to assess as fast as you can the news if it seems like it's significant in combination with the price that you get versus the stop loss that you would need to have, and then you're making a very fast judgment decision on whether or not it's all worthwhile. So that's usually what I'm trying to do there. And then if you're late, you need to set up. If you're late, I guess it depends on the news. There's a world where it makes sense to buy 194.50 versus 192.15 if the news is really strong for the stock. But if you're really late and that risk doesn't make sense, you have to wait for a new setup, which maybe was this inside 5 setup, right? So it starts to flag out a little bit, gives that inside 5. Again, talking about momentum continuation, you had upside momentum from these two bars, a little bit of a price time correction as the ADMA catches up, and then you get continuation of the momentum on this candle where you could look to be able to execute the break of the inside 5 for a trade. So ideally you're catching it early enough where that risk reward makes sense, and if not, you got to look for a new setup to be able to get in. So I hope that helps. Robbie. From Shane, do you or is there any value in trying to figure out the next day's ADMA on the daily? For example, 8 days ago, SPY closed at 444-ish, so therefore the price should drop out of the average. Today we closed at 458.70, so if 8 days ago drops off, should Lightspeed show the ADMA much higher than the current. Yes. Yeah. So I'm doing that. What you're describing, Shane, is exactly what I'm doing with my hedges on my U Pro and my T Triple Q with my game plan, because I said that I don't have a specific out. I don't have a stop loss in T Triple Q on the upside. I have a game plan based on extension, and I will reduce my position until I'm out of my position based on the lack of that extension as it happens, through whether it's through time or through price. My hedges will make me more if we get a price correction than a time correction, but I won't give as much back on my long swings if we get a time correction rather than a price correction, right? So I'm thinking about that. I'm thinking about that into the close today, about where the ADMA on the SPYs and the Qs are going to be tomorrow for that. But I'm only really doing it because of the specific game plan that I have off of this hedge that doesn't have a stop loss, that is entirely based off of extension. So yeah, it is something to think about, but at the same time, I don't think I would overthink it. so it's like, yeah, your direct question was, am I overthinking this? It's like, maybe you are overthinking it, even as it's something that I'm doing. So I think it's something that is worth paying attention to, but I wouldn't drive yourself nuts about figuring out, doing the math and figuring out, what price the ADMA is going to be at tomorrow, kind of situation. Especially because you don't even know how we're going to get. Dollar here. Do you use alerts from Lightspeed or something else? Lightspeed. From J. Cole. How important is red versus green on the inside candle and then setup? It's not. The color doesn't matter to me. It's the period of the rest. Sometimes, the color and the shape of the candle really don't matter to me on the inside candle, unless they do. For the most part, they don't. But generally, if it's a green hammer, it means there's a higher probability that the inside bar is going to break up quickly, right? So, if it closes red, then there's a higher probability that maybe that inside bar breaks down. If the inside bar breaks down, then the setup itself is gone. But at the end of the day, it doesn't really matter, because if it closes green and it's still able to break up, it's telling me the same thing. So generally, I'm going to say it doesn't matter. Space on an inside day and up, yeah, maybe. So this is one of these. This is like an extreme speculative stock as far as I'm concerned. Another company that I really don't like, but had a great breakout yesterday that we saw of this consolidation and took a nice rest. So pay attention to it tomorrow for sure as a pure momentum trade. And again, you don't have to believe in the company to make money, and it's on the long side. If the execution is there and the setup is there, but go for it. Palantir is another one. Did Palantir have an inside day today? It did not, so I don't like the setup quite as much, but it's also, one of these growth stocks. It's made a comeback recently, so we'll see. All right, last question here is from Bo. When you're looking at layers of probability, do you add weight to any of the layers, or are you mainly looking at the numbers? It's definitely a little bit dynamic. Mainly I'm looking at the numbers, but it's a little bit dynamic, if that helps. And so, I know it's not a great answer. Mainly the amount of layers of probability that are on the side, but sometimes it can be like, there's almost like degrees to which things can be on your side. Like, for example, volume. Your volume increasing is good, it's confirmation. But to what degree is it increasing? Is it increasing with massive consistency where by 10 a.m. it's on 100% of yesterday's volume? Or is it just, increasing at a smaller pace than that where it's notable but lesser so? You know what I mean? Like, either way, it's a layer of probability on your side if the volume is increased at all, but in one regard it could be more than otherwise. So I think that applies for every kind of all the layers of probability. The market, right? There are degrees of confidence that I will have on individual days on higher or lower. But today I had a lot of confidence on lower for the market today. Some days I'm like, oh, you know, I think we might drift lower and price correct. If my degree of confidence on the market movement is going to add potentially more weight to the market as a layer of probability, if that makes sense. So yeah, the numbers, but it's a dynamic thing. Sorry to hear it, Judy. Definitely sorry to hear it. You know what happens. The most important thing is to don't let it upset you. Don't let it affect tomorrow's trading. But at the same time, it's worth it to do a review, to ask yourself what mistakes were made, why they were made, what adjustments can I make to make sure that they don't happen again going forward. That's definitely the big part of it. Yep. So if you know exactly what your mistake was, then you know not what to repeat. And I know you've been doing really well recently, Judy, which is awesome. You've been really consistent recently, and then we all make mistakes. You know, I spent 25 minutes in today's afternoon meeting reviewing my own mistakes that I made today for everyone's benefit. So the most important thing is to know it, review it, don't repeat it. From Kosh, I thought PayPal was in play from the morning meeting. No, yeah, it was. Someone brought it up. PayPal got a buy initiation from Goldman. I mentioned I liked it, maybe versus 120. Square also got a buy initiation from Goldman. My big concern on these, though, was the market. And I said, maybe you can look at these because of that initiation. We'll put them in play and give you a lower correlation to the market than it would be otherwise. I ended up not really even looking at these or wanting to be involved in them too much, just because I was just very concerned about the market. I really thought we were going to pull back today. So let me read the rest of your question. So yeah, it was in play. You entered 9 to 36 and 120.102. The stop loss to low day 120.45. Okay. Yeah. Buying a little on the way down, maybe it looks like, which is no, maybe you're not. You're buying it at 122.45. Kind of looks like you weren't buying it on the way down. You got stopped out. You decided to go for it again. It can be tough, so you bought at 145. Sorry, 945. Yeah. This is hard. When they have this opening momentum to the downside, you almost need to see it break the opening high to have confidence that it can continue, which then becomes a lower probability situation. So I don't love the second trade as much. The first trade I'm actually really cool with. We're concerned about the market, but this thing got a buy initiation from Goldman. 120 is a big resistance level. It's above it. You want to, be long versus an opening low, be long versus 120. Like I really like that trade. The second trade I'm concerned with, and I am especially concerned if you took more risk on the second trade than the first trade. That would definitely be a no-no. But I also don't like. So yeah. As I say all of that, and as I really don't like your second trade, I also don't like how you just cut out of it. To be honest with you, you put the full risk on the trade. You could have lost all that money. When you cut out like that, you're really not saving yourself anything. You're just giving yourself the opportunity to not make money should it actually work. It's very easy after we get into a trade to convince ourselves why that trade should not work. And then what will end up happening is you'll never make money on things that work. So, so kind of a compounding of mistakes there. Cool, Judy. I spent if you want to hear about my mistakes, I spent 25 minutes talking about a mistake I made in Roblox today. It'll be available on the YouTube video on the afternoon meeting there on my Derrick the Trader YouTube, which I hope everyone subscribes to because I'm still trying to build that thing up a little bit. But we've been live streaming all the afternoon meetings on there, so if anybody misses one or whatever and wants to go back and review, they can go and check it out. And on that note, it is 5:15. We had a great afternoon meeting today. There were great questions. There was a lot to learn. The market really kind of did what we expected, which doesn't necessarily mean that it was an easy day. But we will assess how we gap tomorrow. This market is still extended to the upside. We'll assess how we gap tomorrow, and we'll come up with our game plan, and we'll figure out how to continue to navigate the market. Have a great night, everybody.